Hello and welcome. My name is Christina Diaz. I am the Marketing and Business Development Manager here at Coastal Equity Group. Today, we're going to be discussing achieving a quick close with your lender and some of the frequently asked questions that we are asked on a daily basis and that we have seen over the past couple of years. So, we hope you enjoy this. And if you have any questions, and after you go over this webinar, please feel free to give us a call. Our direct number is 843-737-0182, or you can send us an email at info@coastalequitygroup.com. All of that information is going to be listed in your caption and as well as at the end of this quick webinar. So we hope you enjoy, and let's get started. So, for those of you who don't really know who we are a professionally managed real estate investment firm and hard money lender. We provide real estate based loans to both new and experienced investors that are in need of non traditional financing. Some of our loan programs consist of fix and flip, bridge loans, long term rental financing, new construction, multifamily, and transactional financing as well. We're based here in Charleston, South Carolina, but our lending footprint expands all throughout the Southeast, and that includes Florida, Alabama, Georgia, Tennessee, Kentucky, Ohio, South Carolina, and North Carolina. And as a team, we try to work quickly and ethically when navigating the underwriting processing. So we always want to ensure that we're achieving the same goals with your investments. So let's take some time to discuss some of the decision making factors that we take into consideration when discussing a timeline for closing. So the first things first is are you currently pre-approved, and what does that timeline look to get you pre-approved? And this is really needed in order to move to underwriting. We'll need to collect all of your preliminary documentation that's pertaining to your entity docs, making sure that you have a completed application and we have some of your bank statements. And we'll go a little bit more in depth as we move forward in some of the other slides that I have for you. And next will be title. So, typically title will need a minimum of 5 days. To get, we could always order a rush, but we will typically want to see and have title a minimum of 5 days before we close. The next thing will be evaluation. So, how quickly can we get an appraisal completed, and when can we get that report completed? And just like title, we want a minimum of 5 days before close. We want to receive that valuation. And with underwriting, so we'll stick to the same rule, 5 days before closing. So, how quickly can we get all the documentation from title, valuation, insurance, and your preliminary documentation, making sure that we have all the correct documents for your purchase and your budget. And these all take into consideration for how quickly can we close. And it's always good to have that open communication with your lending team, whether it's myself or it's anyone from the underwriting team. We could really provide you with accurate dates as to what could be realistic in order to get the job done. The next thing we'll discuss is how do you save time? And that's going to be the first one is your evaluation. So typically, when we do have a tighter timeline, we want to check in with the appraiser. How quickly can they get this report back? What does their timeline look like? So it really helps when you do have relationships with your appraisers in your area. Highly recommend that you work with a lender, if it's not us, that has that ability and has a Rolodex of people in various areas. We pride ourselves on making sure that we try to create those connections, and that way we can help build rapport in your local area. The next thing is underwriting documents. So typically during the pre-approval process, myself or someone else will always walk you through what kind of documentation is required, and it will be applicable to the loan program that you're interested in. But having that great understanding helps set you up for success, and also understanding your insurance requirements. We do have a few connections when it comes to insurance agents throughout the Southeast, but we're always welcome to build rapport with others. So once you have a good understanding as to what their requirements are and you have a good relationship with your agent, you can quickly just give them a heads up. Hey, this is what I'm looking for, and we can make sure that gets done, 5 days at least before closing a loan. So, the next thing that we're going to discuss is some of the frequently asked questions that we have seen throughout the years, whether it's with myself or the lending team. These are a lot of questions that some of our borrowers and prospects that we've engaged with have answered your question. No. Okay. The next thing that we're going to discuss is the frequently asked questions that we have seen throughout the years. And the first question is going to be, what if my budget numbers change during the rehab process? Can I change the budget in the middle of the project? And the short answer is yes. You can rearrange your budget as long as the total number stays the same that the loan originally closed in. So we highly recommend just reaching out to the lending team, and they will provide a change order form so you can kind of allocate the correct numbers and making sure that that overall number stays the same. And if you do intend on going over and you don't have enough funds to cover those additional costs, then we can look at doing a refinance of the loan to include the larger budget. So first things first, we definitely want to see, can we rearrange some line items? And then, if that's not a possible solution, then we will look at, refinancing the loan and including that larger budget. So the next question is, can we go a little bit more in depth about the LTC structure on loans? And this is going to be used more commonly throughout the entire industry. We use LTC for fix and flip, bridge, new construction, and multifamily. For those of you that don't know, LTC stands for loan to cost. And this is the ratio between the total loan amount and the total project cost. And that's how you're going to get your LTC percentage right here. So in this example below, you have a acquisition cost of 150 plus rehab is 155. Your total project cost, which goes down in your denominator, is $205,000. We in this example, we're using 80% LTC. That's typically where we start off and leverage for any new borrowers. Anytime they have anywhere between 0 to 1 projects completed. And so that means that your total loan amount, you would take 164, divide that between your 205,000, and you would get 80% LTC. Another way is to just take that total project cost of 205, multiply it by 80%, and you get 164. So if we want to break it down a little bit further down, we're always going to take away the construction reserves first. So from the 164, we'll subtract 55,000, and that's going to give your UPB day one amount of 109, and that's the amount that's going to be going towards your purchase price. So you have 109 out of 150 that's going to be going towards your your purchase price. The next one is going to be, do you think rates are going to continue to go up? Of course, we don't have a crystal ball. That would be really nice. And that would be really nice to provide all the information of when they would go down. But as you continue to see throughout 2002, we have seen the feds continually increase the rates. That has then had an effect on all the loans in our industry. So they do tend to increase due to correlation between the two. We are hopeful that in 2023 we will see some changes in a more positive direction. So only time will tell, and it is really in the hands of the current economy and the feds. The next question is, what are some ways for borrowers to increase their experience? And there's a few ideas here, and we're always trying to be creative. We always want to make sure that the project makes sense. How can we provide the best terms? Really trying to work with what you have at that current time. And one way to increase experience is by partnering up with someone who has the experience, whether that's a GC or another real estate investor. And the way that you would do this is you would add them to your operating agreement. The percentage that you would add them to, that's really up to you. It just depends on what kind of factors they're going to be bringing into the table, but we will leave that up to the borrower to decide. And then depending on where that leverage would lie, would determine if they will also be guaranteeing on the loan. So overall, that entity would be taking title. So both you and that other person will be able to add that project once completed to your experience track record. The next question is do you have income requirements? And the answer is no, we don't. So, anytime that we're pre-approving someone or they have a new property that they're bringing on that they got under contract, the most important factor on top of experience and FICO is going to be your liquidity. We want to know that you have enough cash to close, and we want to know that you have enough interest payment reserves. So, our minimum requirements when it comes to liquidity is 2 months bank statements. And like I said before, we'll want to see enough cash to close, and we'll want to see at least 6 months in interest payment reserves. So we don't look at W-2s or tax returns. We're solely focused on a minimum of 60 days in bank statements, seeing what kind of liquidity that you have available at that current time. And one of the last questions that we're going to kind of touch base on is there a minimum purchase price that we consider? And yes, there is a minimum purchase price. Our minimum purchase price is 75,000. We want to have loan values that do provide us enough protective equity. So we'll definitely want to review if you are bringing something to the table as to a purchase price of 75,000 and what other factors is there going to be rehab, where does that total loan amount stay, because ideally we do want that total loan amount to stay over 100,000 with a minimum purchase price of 75,000. So we do have additional frequently asked questions posted on our website, and it provides you a good outline as to what the most commonly asked questions are. It also will give you some good resource as to whether it's the fees that are associated with Coastal Equity Group, how quickly a loan can get funded, and what does our underwriting process look like. So there's a lot of great information that we can provide online at our website, directly on our blog, or you can reach out. The best ways to connect with us is by calling 843-737-0182, or you can send us an email at info@coastalequitygroup.com. And we do have our online application directly available at our website. And that will kind of just kick off the pre-approval process. Once you complete a short, quick app, then it will direct you to set up a appointment based on your schedule availability, and you can connect with our lending team in that way as well. So I hope you enjoyed this short video in regards to how to achieve a quick close with your lender and some of the frequently asked questions that we see on a daily basis. Thank you.